Stephen, when you look at everything that we know so far about this activist investor in Barclays, do we know how he operates? Do we know if there's an agenda behind it?
Well, Bloomberg has actually written about this gentleman before. He's made several high-profile investments in UK financial companies. This is the biggest one yet. His general MO is to be quite quiet in public. He's not one of these activists that stands up and berates the CEO at an annual general meeting. Usually they want some seats on the board, they want some say in strategy, and they want to double the share price. That's usually their criteria for getting in. So quite clearly they've decided to go public, and they want some changes at Barclays. We just need to find out what.
Yeah, what are they? I guess is the question. So he came in. Was it a collector? The fund that he came in, the mid-cap fund,
Collector, yeah.
Radically transformed their investment sort of strategy. And that was big surgery. Do you think they're looking in any way at the kind of similar sort of scale here? You talk about sort of doubling share price. That would require a lot.
It would do. If you look at some of the other investments, though, 3i, another UK financial company, they were largely passive in that and just waited for the shares to rise and eventually made 38%. So if we're looking to the past, we're not actually sure which category that's going to fall in. Barclays is an interesting subject for activist investors, though. It trades at more than 30% discount in terms of its market value to the book value of its assets. So quite clearly there's a valuation gap. Tiger Global are another big investor who have come in recently betting that the shares will go up. Now, whether this happens organically and Barclays manages to fix its major problem, which is the investment bank, where it's been losing market share and posting declining earnings for years, or whether that will be shut down, that project will be abandoned, and it will go back to being a more profitable retail and credit card bank, we don't know yet.
But, Stephen, could the activists actually force them, for example, to sell, to split Barclays?
It certainly could be one of the options discussed or on the table. Selling an investment bank is a notoriously difficult thing to do. They usually only get sold for $1 once they've collapsed. They're not usually managed to split off without destroying large amounts of value. But certainly you could pursue a strategy where you shrink it back, sort of like how RBS has done, you know, focusing on a profitable UK core, rather than trying to boost your trading businesses and going back into competition with Morgan Stanley, Goldman Sachs and JP Morgan.